Welcome to another Market Matters weekly update. We're on the video today. We've got the 14th of July. It is Wednesday, the 14th of July. We're heading towards reporting season. The market's been in a bit of a holding pattern of late, James. Doesn't really want to punch through that 74, 75 level. Doesn't really want to go much further below the 7,200 level on the ASX. What's your take on that?
Yeah, well, I think you made mention of a good thing there, reporting. So I think it's in a holding pattern until reporting season kicks in. It comes in to play sort of end of July, really heats up in August, and we'll get a good read through of, has company earnings rebounded as much as sort of the market's priced in. The market's pricing in a huge amount of rebound in earnings. So, whether that comes to pass is going to be the interesting thing. So a lot of optimism built into the market at these levels. As said, we wrote about this morning, the market's sort of oscillating around that 7,300 level or 100 points either side of that. We've been pretty inactive across our portfolios as a consequence of that. I've actually had a few emails from clients around saying, is there any opportunities, anything to do out there in the last couple of days. So we've been a bit inactive, I should say. We're going to do a few things on some of the emerging companies and the national portfolios in not too distant future. But for now, I'm happy with our settings, Harry.
Certainly, one of the main drags on the market today, and probably one of the sectors that's had a lot of optimism built into it, is the buy now, pay later names. They've sort of fallen apart a bit today with news of a new player joining the market. What are your thoughts on Apple throwing their hat in the ring?
Well, we're shareholders in Apple in our international portfolio, but they, as you rightly point out, they're not a new entrant in the buy now, pay later space, but there's rumours that they are going to promote their offering to a wider audience. So Apple, obviously a massive Goliath in the payment space with Apple Pay. They've got it's new that they're going to launch two different offerings. So a pay in 4 solution that's interest-free, pay in 4, directly competing with the likes of Afterpay and QuadPay over in the US. Goldman Sachs is providing the financing, etc., for that product for them. So that's why you've got Afterpay and Zip, etc., Sezzle, OpenPay to a lesser extent, down sort of 6, 7, 8, 9, 10% today. Affirm over in the US was down more than 10% overnight. So that sort of speaks to the issues the market's seeing with this. Obviously, it supports the thesis around buy now, pay later or pay in 4. So it's positive in that respect. On the negative, greater competition, particularly from such a well-funded entrant competitor with a huge customer base and a pretty trusted brand, particularly in the mobile space, is going to be a negative for margins going forward in the space. It's going to make it more competitive and all this. So are they oversold, Harry? Not sure. We'll probably just have to suck it and see for a little while in terms of our holding in Zip, in both our emerging companies and our flagship growth portfolio, but down 10% today. Not great, but we're not going to flick it at this stage.
Basically, given everything back in the last week that it added after the Affirm announcement. Moving on, another one that's in the emerging companies portfolio is Praemium, PPS. They are having a cracking day today. With a new FUM update. Is this what we should be expecting every quarter from Praemium and Hub and all the platforms, James?
So we did a podcast on Hub not long ago with James Bisinella, and we talked around how the business model works from a platform point of view, and it's very relevant for the Praemium business as well. They had a really strong funds under administration FUA update today. They also, the other part of it was around the jettisoning, is that a word, of the international business. So they've had this international business for about 10 or 12 years. It's lost a bucket load of money over that time. And now they're going to look to sell it. They've got a lot of interest in it. So that implies they're going to get a good price for it, and they're going to concentrate on the Australian market given the opportunities there. I think it makes sense just from from reducing the complexity in the business perspective, also focusing on what where you've got scale. Scale is really important in this sort of business, as we spoke to when we're covering Hub in that podcast. So great update. You've got it in your emerging companies portfolio, Harry. What are you going to do with it?
Well, it sort of plays into our view on the markets. Maybe it's run a bit too hard too soon, but I think it's something we need to hold into reporting season at least and see how it plays out there. But I'm not chasing it up here at the moment, but because we're holders, we're going to stick with that one for now.
I agree. I think it's one of those businesses that's tipping over into the into scale. So they've got they're over 40 billion in FUA, and these businesses have got such high operational leverage when you get increasing FUM. By that I mean that the cost to serve doesn't go up equally proportionate to the fund, so that drops down into strong operating leverage, good earnings leverage, etc. So I like that story, Harry. So well done on that one.
Certainly. We sort of spoke about it at the start of this video and a little bit there with the Praemium comments, but some portfolio moves, James. Where are the opportunities that these clients are looking for?
So that's a really good question. So if I think about it, I'm doing a webinar tomorrow at midday. So for Market Matters members only, just focusing on our portfolios and our likely moves, views around particular stocks in our portfolio and how our 5 portfolios are positioned. So I'll talk more about it then. So there's this concept around going more into the resources trade and the flagship growth portfolio. So I want to be doing that, and we want to be trimming tech. So we'll speak about that tomorrow. We've had a really strong period of outperformance in the flagship growth portfolio in the last this financial year today, so the last couple of weeks. But we had a really good momentum into the back end of FY21 as well, and that portfolio had strong outperformance going in for that financial year as well. So if I think about the other portfolios, you've flagged a few amendments or additions to the emerging companies portfolio, spending some cash, which I completely agree with. We've got 19% cash in the international equities portfolio. I think that's too high, so we're looking at a couple of opportunities there. So I'll go into more detail in all of those likely moves, our views on individual stock holdings and portfolio compositions in the webinar tomorrow. But suffice to say that we've had a couple of weeks of reasonable inactivity. We're going to become more active in the coming weeks than we were in the last.
Certainly, James. Thanks for joining us. I'll let you get back to your part-time teaching role for a little bit of this afternoon.
I'd like to be part-time. I'm not. I don't think I'm not. I wouldn't call myself part-time at all. So, absolute passenger in that, Harry. But we've all got to do our bit, I guess.
Certainly. We'll chat soon.